Hello, my name is Doug, and I am the owner of Home Finances Explained. This is going to be a YouTube channel that is focused on home finances and just being able to help the average listener with their home finances and getting them as successful as possible. So, whenever I think of home finances, I think of money coming in, money coming out, bills, credit scores, um, different kind of debts such as student loans, auto loans, home loans, credit cards, some bad loans such as personal loans and payday loans. And I just want to kind of talk about those and the best way to leverage yourself, get yourself out of bad debt, and be successful. I have a pretty extensive history in the finance field. I graduated in 2020 with a BA in finance. I'm actually currently on my way to getting my master's of business administration in the finance field. I also have worked in the auto and home insurance industry as well as life and health. I sold life insurance for a few years. I worked as a loan officer for a bank where I did home loans, auto loans, some personal loans, as well as business loans for small businesses. So I come to this channel with a large array of experience as well as just knowledge from the field and being interested in it. And my goal is just to kind of pass over that wealth of knowledge that I've gained over to the average listener. I am not a licensed financial professional. This is simply just my opinion passed on to people from what I've read, from what I've learned. Um, by no means do you have to do what I say. By no means should you do what I say. But I think I do have a good amount of information gained that I can, like I said, pass on over to the average listener. So today I want to kind of start off with credit scores. I feel like credit scores, if you have a good one, really, you don't really care about them. But whenever you don't have a good credit score, they're the worst thing on the planet because it limits your ability to do just about anything when it comes to money. If you want to get a good car loan with a good rate, you got to have a good credit score. If you nowadays want to get a good apartment or rental property, sometimes they will check your credit score. Credit scores also directly impact your auto and home insurance rates. There's so many different ways that credit scores impact your financial portfolio, and my goal is to explain those to you today. I don't want you to be in the red, rather I want you to be in the green. Right about there it is. Sorry, use my computer. But yeah, I want to get you guys as good as you can get. And there's about five factors when it comes to credit scores. The five factors are payment history, credit utilization, your length of credit history, your credit mix, as well as your new credit and recent credit activity. So I want to go through those five factors and just explain to you how to make those as high as possible to increase that credit score. So first, I'm going to go over payment history. That makes up about 35% of your score. I think payment history is pretty self-explanatory. If you make your payment, you're doing great. If you don't make your payment, it's going to tank your score. That's the beautiful thing about it. If you're going to take out debt, realistically, you should be paying on it because a loan is a contract between two people. If I'm the lender, I'm going to give you this product. You're going to promise to pay me back for that product at a certain interest rate. And interest is just the cost of borrowing money, simple as that. So when it comes to that, that payment history, that's you fulfilling that promise of, hey, I'm going to pay you back for that product you're allowing me to buy. Um, there's a lot of different kinds of loans, whether it's a home loan, an auto loan, or credit cards. Credit cards, sometimes those payments, it's better to even just make the minimum payment so that you're making some kind of payment versus not making any payment because the balance is too high and then your score starts to tank. I know student loan payments have become another hot topic of the industry, but that's for another day to talk about. But yeah, that payment history is 35%. Make sure you're paying that on time. Next is credit utilization. So credit utilization is how much of your credit you're using. You know, I it's kind of crazy these days. Credit card usage is at an all-time high. I know it's somewhere in the 1 point X trillion dollars. I think it's almost approaching $2 trillion, which is pretty crazy. But it life has gotten expensive, so you know the best way to subsidize those expenses, if you're not a financially organized person, is credit cards. And a lot of people have maxed out credit cards, which kind of kills your credit utilization. Credit utilization is how much credit you're utilizing of your allowed balances. So let's use round numbers here. Let's say I have a credit card and the allowable balance is $1,000. Well, the the highest credit utilization you can use to increase your score to the green is 30%. So whenever it comes time to pay your balance, at minimum, you should be paying down your credit card in the $1,000 allowable balance situation down to $300, because that keeps your statement utilization rate at 30%. Obviously, it's best to pay it off completely, pay off your statement balance so you're not paying interest. But sometimes we can't do that. We just have to pay it down as much as we can because we get into between a rock and a hard place, and that's life. That's what credit cards are for. Obviously credit cards are for building rewards, but they're also a way of avoiding taking out a payday loan or a personal loan at a higher interest rate. So once again, that credit utilization, keep that below 30% and you'll be in great shape. The next is length of credit history. I've always kind of found this category a little bit silly, because if you're a 25 or 30-year-old looking to buy a home, or get a good auto loan rate, your length of credit history is only so long. I think 7 years is whenever it gets like to a really good point. But um, obviously, the best way to have a good length of credit history is to, if you have a credit card, don't be opening up a bunch of new credit cards, because yeah, you may have one card that's been open for 7 years, but if you have another card that you just opened 2 months ago, then it's going to take the average of your length of credit history. So between 7 years and 2 months, your average credit history is 3.5 years. But if you would just kept that one credit card, you'd be at 7 years. So it's a big swing when you start opening up a bunch of new credit cards. It's really going to hurt your average length of credit history age. Next is credit mix. So credit mix, once again, kind of a weird one. It's 10% of your score. It it's basically the way of creditors want to know that you can handle multiple kinds of debt and handle it successfully. So throughout my life, I have had home loans, auto loans, credit cards, and student loans. Luckily, my credit cards, I've been as responsible as possible and tried to pay those off, the balance as I can. But I've been able to show that I have control over my credit mix. Now, that's not saying if you only have a home loan, that's going to hurt you. That's great. You know, the less debt, the better. They Creditors don't want to see someone who has just a bunch of debt and they go, okay, this is great. This guy can handle credit cards. The less debt, the better, because you're going to get it approved for more more of a loan balance, such as like a home. If you have less debt, they'll approve you for more of a home. Um, and if you have more debt, you get less. Simple as that. So whenever it comes to credit, make sure you don't need to get the infinity stones of different kinds of debt types. That's not what you need to do. So I would not really pay a bunch of heed to the credit mix. Just don't take out a bunch of loans. Be responsible, and pay off what you have as soon as you can in a responsible manner, but also, make sure that they are good loans, not bad loans or bad debt, such as personal loans, payday loans, even a bunch of credit cards. That would constitute bad debt. The last category for credit score configurations is something I mentioned earlier, which is new credit. So this would be whenever they talk about, inquiries on your credit report. If you are just left and right applying for credit, that's not a good look because it shows that you are essentially desperate for getting some kind of debt instrument to have some money available. Realistically, you shouldn't have to do that because you can budget your money, and you're not terribly in debt to do that. Also, once again, I keep going this home loan example because that's just what I did. I was a home loan officer as well as other kinds of loans, but home loans are pretty universal. If I were to see somebody that had a bunch of inquiries on their credit report and they wanted to get a home loan, but they had inquiries from Rocket Money and XYZ Bank and ABC Bank and 123 Bank. And then they came to me and said, "Hey, I want to apply for a loan." And I see that they had four other inquiries from other home loan servicers. I'd be going, I wonder why they didn't go with one of those four prior options. Um, Usually, if that's the case, it's because they were denied. So once again, just kind of being aware of that. And I will say this is not an ad. This is just a simple plug for something I use. Downloading the app Experian or Credit Karma on your phone and creating an account and checking that once a week, once a month. If you're really trying to increase your credit score, you do it daily. But being aware of what your credit is, how to increase it, is a great practice for anybody because if you want to get a home loan, if you get in that 580 range, it gets pretty tight, but you want to sit around 620 at a minimum or that 660, 670. 660 is about the bare minimum for most small community banks to get an in-house loan. I know you can get a 580 FHA loan on a home, and for auto loans, really they're pretty flexible if you have money to put down. Credit cards also are pretty flexible. They'll give credit to just about anybody if you can find the right credit card company, but I wouldn't recommend doing that. So all in all, you know, I hope this helps you guys understand credit more. If you could listen to comments and questions, I would love to be able to work with y'all and explain it better. I know I'm probably not the greatest teacher. I would like to think that I have a pretty good amount of knowledge. But when it comes to explaining it, I can always do better. Um, Please leave some comments or questions and I will address them. And if you'd like it to be whenever I talk to you guys like this, I can do that. Or if you prefer just a quick response, I am also able to do that. But I greatly appreciate all y'all watching this. And once again, just keep on checking in on me, and I'll be doing my best to help you all with your home finances and explain them as best as I can. But from here on out, looking forward to helping you all. Take care.